So from time to time, I talk about zombie houses, zombie homes on this channel. But here's something new for you. It's actually called zombie debt. It's going to impact a lot of homeowners. It's basically issues from back in the day rearing their ugly heads. But it's no surprise if you know what's going on behind the scenes. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is November the 17th. Randy Patrick here, putting the realism back in real estate. Hope everyone's doing well. And guess what? If you want to know what's going on in real estate and you want to grab my report called From Bubble to Correction, then Crash to Crisis, how the housing market imploded in 6 months, there's my email. Send me an email. I'll fire that off to you as soon as I can. All right. So interesting enough here, this article came out of Fortune, and they're talking about zombie debt. So zombie debt is rising to bite homeowners of old loans with new collections actions. So here's the kind of thing I want to sort of point out is that this is going to happen. We knew this was going to happen at the end of the last housing crisis because there were a lot of things that didn't get cleaned up or tied down, etc. And basically, it was one of those things. It's kind of like, will it happen? Maybe it will happen. Maybe it won't. But the option was always there. So it looks like some of these things are coming to fruition right now. So what is this zombie debt? So really, the article talks about people who are getting blindsided or shocked because suddenly they're receiving foreclosure notifications from a lender which they thought didn't exist anymore, or for a loan that they thought was already gone or charged off, canceled, etc. Well, here's the thing. Back in the day, there were a lot of second mortgages and HELOCs, etc., that for whatever reason maybe stopped or didn't pursue going after the homeowner because it didn't make sense. Typically mortgage foreclosures usually, I guess you could say, are involved the first mortgage or the primary mortgage. That's the number one focus. If there's a second mortgage, they typically get wiped out. So once it's foreclosed on, so many times, second mortgages or HELOCs don't actually file foreclosure actions, knowing that they're not in strong positions. Well, things have changed, and if you listen to the mainstream media and the housing narrative, obviously we're sitting on, what was records of, all this tappable, trillions of tappable equity out there. So guess what? Now these second mortgages, these collection companies are actually rearing their ugly heads and going, hey, we want to get a piece of the action. We're going to come and collect. So it's funny because some of these homeowners said they weren't even aware they had a second mortgage because of confusing loan structures. Others believe their second loans were rolled in with the first mortgage payments or forgiven. Typically, they had not received statements on their second loans for years as they paid down their first mortgages. So now they're being told the loans weren't debt at all. Instead, they're what critics call zombie debt. So that's the term for zombie debt. Old loans with new collection action. So again, this is happening right now. And this is really looking at stuff from back in the day. And we're really focusing on second mortgages and HELOCs that were exposed. They really couldn't do anything about themselves back in the day. Now they can. Now, as a side note, sidebar comment here, what we are also seeing is we're seeing what I would call legacy foreclosures. So these are foreclosures that were filed back in the day, 2009, 10, 11, all the way up to 2016, 17, if they're still out there. So there are a lot of older foreclosures that are still kicking around. They haven't been brought to fruition, which means they haven't been taken to sale yet for various reasons. So guess what? We're going to see the same thing. And we already see it happening in our area, that a lot of these older foreclosures that were just sort of put on hold or just sitting there doing nothing for reasons unknown are now getting regenerated, refiled, and they're coming back to light. Homeowners that have not been paying their mortgage, their insurance, or taxes for years are also, like, they're suddenly getting on their first mortgages notices of foreclosure, etc., and they're shocked. Now, listen, if you've not paid your mortgage for 10 years and you've sat in your house all this time, you've done okay. It is time, they say, to pay the piper, but this is what's going to happen now. There's many reasons for it, but what we see now, a lot of the lenders are also going, okay, we've got equity here, so we want to get our chance at grabbing these loans, but also they know the next foreclosure waves are coming, so they want to clear out the backlog so they can participate. So yes, no federal government agency tracks the number of foreclosure actions on the second mortgages, which is true. As I always mention, the foreclosure, default, delinquency, forbearance data is tough at best to get a handle on. We'll never ever know the true numbers that are out there. The issue, though, is that the attorneys say many of the loans are owned by purchasers of troubled mortgages and and are being pursued now because home values have increased and there's more equity in them. That's right. So back in the day, there was a lot of assignment of mortgages, a lot of companies that went out of business. So those mortgages were assigned or purchased by other collection companies, other mortgage companies, and they'll sit on them. They'll sit on them waiting for a rainy day, and then when the time is right, they'll foreclose or they'll try to collect. Now, realize that a lot of these groups bought these mortgages for pennies on the dollar. So it was a long-term investment strategy, and it's now obviously it's paying off because they think the time is right now. So essentially, they've been holding them with no communication. All of a sudden, they're coming out of the woodwork and threatening to foreclose because now there's value in the property. Now, here's the thing. They can foreclose on the property and actually get something after the first mortgages are paid off. So clearly, if you're in a second position loan on a property, if you can't foreclose if the value of the foreclosure, say it sells at auction, will only cover the first or part of the first, and not cover your second. So it doesn't make sense. So they've done the numbers. They've said, listen, we know that if we foreclose and it goes to auction, we take it back, we can pay off that first mortgage because there's enough equity and the values are so high. So this is how it kind of works. So people have forgotten about this, and this is the problem. So it's like we didn't realize we had this. So again, as the slide says, how can this happen? Well, guess what? Court actions can now be traced back to the last housing boom. Some involve home equity lines of credit. Others stem from what's called 80-20 loans. So yeah, what was happening back in the day is that you had these 80-20 loans in order to sort of make the deal work. So the 80% of the value or of the purchase price was going to be like a primary mortgage, and that 20% was a second loan or a home equity line of credit. So basically, what it did is allowed borrowers to split large down payments and can cover things a little easier back in the day. So the surge in people falling behind on mortgage payments after the Great Recession began including homeowners with second loans. They were among people who took advantage of federal loan modification programs, refinanced or declared bankruptcy to help keep their homes. In some cases, the first loans were modified, but the second ones weren't. And here's the problem with the lenders. The lenders are only going to work with you on whatever loan you want to talk about. Oftentimes, they're not suggesting, hey, you have a second mortgage here. They're not offering up any solution or any help. And here's the thing, though, too. Second mortgages at the time were what's called charged off. So basically what happened was the lender charged off the loan, meaning the creditor had stopped seeking payment. That doesn't mean the loan was forgiven. But that was the impression of many homeowners, some of whom apparently misunderstood the 80-20 loan structure. So in mortgages, charge off is basically saying, well, we've charged it off. We're not going to pursue it. But guess what? The debt is still there. Okay. The mortgage is not forgiven or satisfied. So if you have a home and you have a mortgage and you sell your home today, the title company calls your lender for a payoff. They get the payoff. When the transaction happens, the title company sends the payoff amount to your lender, which pays the balance. Shortly thereafterwards, the lender issues a document. Typically, it's called a full release and satisfaction, which that basically says, hey, we've received payment for the balance of what was owed in the mortgage. We've released the lien on the property and the people, and the mortgage has been satisfied, which means it's been paid in full. So again, we always want full release and full satisfaction. So charging off and cancellation is not full release and full satisfaction. So this is where it's basically wordplay, but ultimately in the end, homeowners thinking, oh well, they just forgave that loan. They didn't come after it. Well, you know what? Here's the thing. You go back in time. What was the problem back in the last housing crisis? Too many foreclosures. Banks were not prepared. Bank didn't have the staff. Wasn't enough government programs. They weren't effective at the time. The court systems couldn't handle the volume. So it was a big mess out there. People were faxing in their loan modification documents to the lenders. The lenders lost them all the time. It was a big mess. Okay, so that was the problem. So what happens is that a lot of these things get lost through the cracks, and people just forget about it. Lenders forget about it. But then, guess what? I guess you say mortgages are assigned. Things change hands. We have 100 times better data today, better systems, better everything. So now, and there's more attorneys that are out there. So I always say this: going back in the last housing crisis, it was more of a, oh my gosh, we've got this housing crash happening. What do? We want to cover our losses. All right, take care of things, cover the losses as best as we could. That was kind of the mentality at the time. Where we are today, this is like a profit center. So if the lenders can sell these old mortgages to other collection companies, other lending institutes for pennies on the dollar, and then those guys will come after you. It's a money-making opportunity, right? They're getting something for nothing. So They're more aggressive and they're more interested in doing that right now. This is why we're in this situation. So again, all these old loans, they've not disappeared. They're coming. As I said, they're rearing their ugly head, and they'll cause some homeowners some problems. And again, this is very, very, I guess you could say, pointed here. Charged off does not mean forgiven, which does not mean fully released and satisfied. All right. So this is what I guess they call the zombie debt. I deal with some of this. I deal with zombie properties, the abandoned properties as well too. They're still out there. So it's just kind of funny how this, every so often you see something new. But again, we knew this was going to come. I mean, if you're in the industry and you saw what happened back in the day, you knew at the time that it just didn't make sense for these guys to come and try to collect and foreclose. They're going to bide their time, and now they're ready, and now they're going to play it. And it's, now that the housing market has already reached its sort of peak and it's sort of tipping the other way now, and we're seeing some reduction in price points and values in many places across the country now. So now they're going, okay, there's enough equity there. We see the slide starting. We better go out and try to collect, or else we'll lose again in the end. So that's what's happening with these guys. So zombie debt. So anyway, just something I want to mention here too. So speaking of zombies, I don't know if you remember this, but this was about a year ago, actually. It actually was November a year ago. I did this video, okay? Obviously, I've got my N95 mask on. I'm walking through what is a classic zombie foreclosure house, all right? Simple as that, zombie foreclosure house. If you saw the video, it goes back to, it's in November. I think November 10th was the video date. And I'm walking through this very nasty abandoned house with many holes in the roof, destroyed, water intrusion, lots of mold everywhere, which is a mess. I literally couldn't breathe properly, had to wear that. Well, speaking of zombies, I'm happy to kind of mention that, guess what? That property, so the deal that I worked on with the investor group that I work with, the property and deal will appear on A&E Network's Zombie House Flipping show. So this upcoming season, there's a couple of new shows coming on. There's the Zombie House Flipping franchise. They're doing I guess you could say a show about doing that in the Tampa Bay area where I'm located. So that property that I worked on will be on that show. Now, personally, I'm not going to be in the TV show. I'm not part of that, but I'd like to at least say, hey, if you want to go back in time and walk through the property with me, it was a big mess. And this is a classic case study, guys, a classic case study. We got a phenomenal discount from the lender on this. It was a lot of work and a lot of well, it was a process. It was a lengthy process, a lot of gamemanship, a lot of chess playing that went on this, but you had to work through the legal system, etc. But in the end, this was a great acquisition for my investor partners, and we got, again, an amazing discount from the lenders on this property. So this stuff exists. And again, it's going to pick up again. That's why they're doing more of these zombie house flipping shows across the U.S. So anyway, I just thought it'd be a little trivia there for you guys. All right. So once again, I appreciate the views, likes, and comments. But if you're not a subscriber, if you can help my channel grow, hit the subscribe button. I really appreciate that. Thank you. Okay, going forward here. So speaking of zombies and zombie debt and zombie foreclosures, well, more foreclosure activity. So in October 2022, U.S. foreclosure activity increases 57% from the previous year. So not a huge increase, but 57% up from 2021, but up only 2% from a prior month. Now, again, foreclosure filings and foreclosure activity can ebb and flow with many different features and many different reasons why numbers would increase or not increase fast, etc. But we've been on a pretty good clip on increasing from where it was back a few years ago. Our favorite states, Illinois, Delaware, and New Jersey, had the highest foreclosure rates here. Basically, what we're talking about is, I guess on a per capita basis, that's the worst places for foreclosures. Now, of course, everyone's talking about the foreclosures rising. October foreclosure activity was about 59% of pre-pandemic numbers, and its current pace of foreclosures probably won't be back to historical normal levels until sometime around mid-2023. But that's an important statement. Current pace of foreclosures probably won't get back to or back to historical normal levels until sometime around mid-2023. So we're not at norm. We're still below norm, but things are increasing. So that's we should be excited about that. Areas that had the worst foreclosures rates, some of the big cities, St. Louis, Missouri, Cleveland, Las Vegas, Riverside, California, Chicago. So again, the same big players back in the day that had problems, having problems again. All right. California, Texas, and Florida had the greatest number of foreclosure starts. So basically, the lender started, foreclosure, starts on almost 22,000 properties in October, down 1% from last month, but up 103% from a year ago. So this is the number that I'm more concerned about. The previous numbers is all foreclosure activity, foreclosure starts, foreclosure sales, repossessions, whatever, bank owned. So it's interesting, but the number I look at is the foreclosure starts. So we're up 103% from a year ago and just 1% from last month, but last month was a big month. So states that had the greatest number of starts: California with almost 2,600 starts, Texas 1,900 starts, Florida just over 1,500 starts, New York a little over 1,360 starts, Illinois 1,300 foreclosure starts. So for those of you who are saying, well, I don't see any foreclosures, or it's not happening, or blah, 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 this is what's happening, okay? Obviously, these are the bigger populated states, of course, but things are happening. So, you might want to go, well, why did California have almost 2,600 foreclosure starts when it's got huge amount of appreciation? Why can't people just walk away and sell their home and go off into the blue? Well, it's a neat question. We'll have to talk about that in the future. But again, it just goes to show that we're not out of the neck of what's the word I'm looking for? This is going to get worse. Okay, we're correcting now with respect to the housing market and everything that's talked about in the narrative in the mainstream media, which is fine. But no one, as I always say, no one considers these foreclosures. They're going to tip us over the edge, and they are coming. You see that they're coming here. You can't see them yet in the marketplace, but everything, the process is increasing. The volume will be hitting us fairly soon. Okay, so as I say, don't miss out. If you missed out on the 2008 crash, don't miss out on the second chance of a once in a lifetime opportunity. This could be even worse or better depending on your perspective of what happened back over 10 years ago. So I say get prepared. Get prepared to see what's going on here. If you want to find out the foreclosure deals, I just showed a bunch of foreclosure starts in those cities, in those states. So if you want to look for yourself, go to gethousingdata.com. That's gethousingdata.com. It's my affiliate link with foreclosure.com. You can check out these distressed properties in your own backyard, your own neighborhood. Okay, there you go. As I always say, I'm looking to expand, looking for real estate agents, investor partners, funders, the whole bit. We're moving forward with a lot of different projects, a lot of cool things here in real estate. So please, jump on board. Call me, connect with me, email me, tell me what you want to do or what you're looking for, and I'll see if I can help and we can figure something out. That's how you get a hold of me. That's my email right there. And once again, thanks for the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. And I look forward to speaking with you in a couple of days. See ya.